Hello and welcome, everyone. I'm Tom Bowley, Chief Market Strategist at earningsbeats.com, and this is Trading Places Live. It is Wednesday, September 2nd, 2020, and I am pre-recording this Trading Places Live for Thursday, September 3rd. Futures currently down a little bit after hours. We had another really strong day, especially on the Dow. Dow was up more than 450 points on Wednesday. We'll talk about that in just a bit. Our agenda for today, we're going to get into the daily market recap, move into talking technically. I'm going to do an anatomy of a trade. Actually, I had one that didn't work out today. I thought it was kind of an unlucky trade. I thought I had the right stock, right industry group. Everything seemed right, except the stock didn't do what I thought it would do. But we'll go through that. Then I'm going to go into earnings spotlight. Got some additional companies reporting after the bell tonight, so we'll go through and take a look at some of those companies, and then we'll wrap up with the three you must see. Before we get started, though, do want to just show you and take you over to earningsbeats.com. We have a free Earnings Beats Digest newsletter. Comes out Mondays, Wednesdays, and Fridays. Love to have you join our community. Just simply type in your name, email address, hit that subscribe button, and you can join our community of traders. I think it's a great educational newsletter, but also there are trading opportunities and trading ideas that are handed out throughout the week as well. So I think you'll enjoy it. If you want to unsubscribe, you can do so at any time. No credit card required. That's completely free. If you'd like to try our paid service, you can click on this green Join Today button. You can see below our portfolios have been doing extremely well this quarter, and really since inception across most of our portfolios, we've done very well. But if you want to come in and check it out, just click on that Join Today button. It'll take you to a page, show you a little bit about what we offer and the different rates. And you can sign up $7 for 30 days, but it's fully refundable. The $7 will be refunded back to you within a week. So literally zero cost for 30 days to try it out. I think you'll enjoy it, but check it out if you have some time. I think it will be a really good choice. All right, let's move on to the daily market recap for Wednesday. The Dow Jones Industrial Average up 455 points. Big move on the Dow today. It was the leader, outpacing the S&P slightly. The S&P, you can see, was up 1.54%, 54 points, getting close to 3,600. Wasn't that long ago. We passed 3,386, which was that February high. Went right through 3,400, right through 3,500. Now we're approaching 3,600. Excuse me, and we're doing it during the summertime, which historically is a little bit more of a rough period for U.S. equities, but not the case so far this summer. We have been on a tear. But the Dow Jones getting closer and closer to an all-time high. The S&P is already there. NASDAQ's been there for a while. NASDAQ up about 1% today. I thought that was still pretty bullish, and I'll tell you why in just a couple minutes. But we did finish on the NASDAQ above 12,000 for the first time in history. And NASDAQ 100 was above 12,000, I think, yesterday, and continued moving higher. Mid caps, pretty strong day today, up 1.31%, and small caps up 1.19%. The interesting part, when we look at the sectors, though, check out the leaders. This is kind of odd. Utilities, materials, real estate. We did have communication services in there, which was nice, breaking to a new high, and healthcare broke to another new high. So it seems like now we're getting a little bit of momentum into the healthcare area, which is good to see. But utilities over 3% higher today. Real estate 2.25%. Those are two laggards on the defensive side. Kind of odd to see a big day today, when you're just looking at the major indices, and then realize that it's utilities and real estate among the leaders. That doesn't give me the warm and fuzzies, but anyhow, it is what it is. Let's move on to the 10-year Treasury yield, where you can see we fell below that 20-day moving average. I don't like that. We're just a tad above the 50-day moving average, and also above the recent lows from about a week and a half ago in the yield. So look for about 0.62, 0.63 as the next key area of support. I really don't want to lose that level. I didn't want to lose the 20-day, to be honest. So this was another little bit of a warning sign, because talking about utilities, real estate, two defensive groups leading the market higher. Now we've got the 10-year Treasury yield going down, which means Treasury prices are going up. Treasuries are defensive. So when you got traders out there looking to buy treasuries, that does reek of defensive investing. And that's normally not what you want to see if you're expecting the sustainability of an advance. So we're starting to see some cracks in the foundation. And I'll talk about this again in just a couple minutes. But I did want to point out that on Thursday, initial jobless claims will be out. The expectation is for 958,000. Last week, we were just over 1 million. So we are expecting that number to come down. Then we're going to get the second reading of Q2 productivity, and that's expected to rise slightly from 7.3% last month to 7.4% this month. And then finally, August ISM services will be out, and the number for August, 57.0. That's the estimate. July was 58.1, so we're actually looking for it to pull back a little bit. I don't know. We've been going up, been beating that number the last couple of months. I wouldn't be surprised to see the ISM beat that 57.0 estimate. We will see, and we'll find out in the morning. Couple things. Well, one main thing after hours, AMC, which had announced earlier on Wednesday that it was going to be opening 140 additional locations, bringing their total openings to 420. And later this week, also planning to open, I think, another half dozen or so in California. So good news, and we've been seeing AMC move higher. In fact, I'll pull that chart up for you here. Tried to break out, didn't quite make it. Wanted to get through that high, especially on a closing basis. Didn't do it. After the bell today, they filed for a 30 million share common stock offering. And last I looked, stock was down about 5.5% after hours. So AMC could be in for a little bit of a pullback in the morning based on this offering. All right, let's go ahead and move into talking technically. And what I really wanted to talk about here were 3 negatives that I saw in the market today. I'm building cash. I'm getting a little nervous about the market, and I'm going to tell you why. Earlier, I think last week, Friday, I pointed out that the VIX was on the rise, and that was certainly one thing that had been bothering me. I wrote this Chart Watchers article, Key Sentiment Indicators Flashing a Major Short-Term Warning, and that was the VIX. And the VIX, I'm going to go ahead and pull this chart up for you so that you can see it. But you can see now that this 5-day moving average is about where we were earlier in July, so probably close to 2 months ago. It's been that long since we've had the VIX 5-day moving average above 25, and it is rising. The interesting part here is that normally what happens, the S&P goes down, the VIX goes up. The S&P starts to rebound, and the VIX goes down. Here you can see the VIX rising and the S&P falling. And then you get the S&P rising and the VIX falling. You see this almost perfect inverse correlation? That's the way this normally works. Well, if you look just here at the past couple weeks, the S&P 500 has just been rocking higher, and now the VIX is going up with it. And if you understand what the VIX is, volatility index, it's known as the fear index. So, what this is telling me is the market's getting more and more nervous as we keep going higher. And that's not a long-term problem. It's a short-term problem. And does it mean that we have to pull back? No, nothing ever means the market has to pull back. There's no guarantees. But what I can tell you is that the correlation has turned positive to the largest extent we have seen at any point over the last 5 years. This is really odd. Very, very strange for the VIX and the S&P 500 to move up in the same direction as long as it's been moving up. And when you take a look, anytime it goes into positive territory, it can be a problem. So I've identified with these vertical dotted lines right here, I've highlighted the periods, the last 4 periods, including now, when we've been in positive territory on this correlation. And just take a look at what's happened afterwards. I mean, here it didn't hit the top exactly, but it did tell us that the market was nervous. And once we started to get bad news on the pandemic, the market sold off. Here, this was back in May of 2019. I think this was the trade war. We had another bout of the trade war in May, if you recall, of 2019. And at that point, we were moving up, and the VIX was also starting to turn back up again. See how it bottomed and started rising at the top? And then as soon as that we got more and more word of the trade war and folks got nervous. It led to a sell-off. And from here down to here, we were down, I don't know, 25, 29, 50, probably 200 points, maybe 6, 7% in a month. And then from there, we rebounded and kept moving higher. So this wasn't a long-term warning. It was a short-term warning. Now here, obviously we got hit, but I don't think too many people knew that not only were we going to have the pandemic, but that it was going to end up shutting down our economy, shutting down airlines to a great extent, cruise lines to a great extent, hotels, limiting travel around the globe. I don't think too many people saw this coming, or at least not to the extent that we had it. So this signal is not telling me that we're going to have a 100-year pandemic hit. It's not telling me that we're going to have a 35% market crash. It's just telling me that the market's getting fearful. And when the market gets fearful, you have to be a little bit cautious when that fear is building while the market's going up, because it's telling us that, yes, prices are going up, but normally the market is complacent when prices go up. That's what you want. You want a boring market. This isn't exactly a boring market. And if you watched Apple or Tesla today, you know exactly what I was talking about. Zoom even, at the early part of the day, some big moves there. But the market is getting nervous with this move to the upside, and I think we have to be a little careful. The last 3 times prior to this, you can see quite a bit of volatility here, big move down. Back in January, end of January 2018, big move down. Those were the last times that we've seen this kind of a positive correlation. So I just think you want to be prudent and you want to be careful. Not predicting a major slide. Would I be surprised if we lost 3, 5, 7%? No, I would not. It's September. Historically, this is not a great time of the year. The worst month of the year for the S&P 500 since 1950. We've got money moving into defensive areas that I talked about just a little bit ago. We've got the VIX rising with the S&P 500. We can see on this chart what's happened last few times this has happened. So yeah, I mean, we need to be somewhat cautious, I think. Now, were there positives coming out of this? Yeah, there were some positives, but as I mentioned, sector summary shows utilities, real estate leading. Look at the scooters, 10 and 30. These were 2 of the top 3 groups. These are defensive groups. That's not what you want to see. The 2 best groups that we've seen in the market have been technology and consumer discretionary. They both went up, but they trailed the S&P 500. So they didn't go up nearly as much. But the positives that I see, number one, 10 of the 11 groups were higher today. So it's not like the market rallied on the heels of just 2 or 3 sectors. It was, almost every group went up. So that was good. But I would say probably the biggest positive, if I had told you at the beginning of the day that Apple would gap up $4 at the open and then lose $11 in 20 minutes. I mean, that's about 8% of its market cap in 20 minutes. 8% of its value is gone. If I told you Apple was going to do that in the first 20 minutes of trading, and I told you that Tesla over a 24-hour period, maybe 25 hours, 10:30 on Tuesday morning to 11:30 on Wednesday morning, if I told you Tesla was going to drop almost 20% of its value, and then Apple was going to lose 8% of its value in 20 minutes, and then I told you that Zoom was going to open down more than 10% in the first 10 minutes of trading, what would you have thought the market would have been doing? I mean, let me show you the spider today. This is the spider opening up. Yeah, I mean, Apple and Tesla and Zoom had their little bit of an impact, pulled it back a little bit, never went negative. And then look at the rally the rest of the day. So there's a lot of folks saying, well, this market's only being led by, certain big cap growth stocks. Well, today was the opportunity. Those growth stocks were getting hammered. Market didn't care. Market's going higher. I think this is kind of underscoring what I've been saying for months. We are in a secular bull market. Don't confuse the health crisis with a financial crisis or a market crisis. Yes, we had all that back in March. We panicked. I think it was completely overblown personally in terms of the impact that it should have had on the stock market, because I think everybody knew at the very beginning that this was going to be a temporary healthcare crisis. How long? Who knows? 6 months, 12 months, 18 months, I don't know. But after that, that healthcare crisis would be over. I think just about everybody would agree that with the scientists we have around the globe working on a vaccine, that we were going to come up with something. We still haven't come up with it, but got a lot of companies that have been fast-tracked and certainly appear to be in a position to come up with something very soon. I have a feeling what's going to happen is when we finally get the news after this huge rally in the market, I think when we finally get the news is probably when we're going to see our biggest sell-off. And it's going to shock everyone, because at that point, everyone's going to be like, whoo, we got all that behind us. Now let's get into the market. And that's when I think the market sells off. It's just the way the market works. It's already been anticipating the strong growth. And I think down the road, it's going a lot higher. But in the short term, after this huge move that we've seen, yeah, we're going to probably pull back. And I think probably one of the biggest pullbacks may coincide with positive announcements about vaccines. All right, let's look at the NASDAQ 100 components, because, I said Apple didn't do very well, Tesla didn't do well, Zoom didn't do well. But if you look at the NASDAQ 100 components, these are all the winners today. You can see there are a lot of winners. Anybody says that there's no wide participation, I think would be sadly mistaken. Only 9 companies in the NASDAQ 100 were red today. It just so happened that Apple, Tesla, AMD was another one. AMD was down 2% today. Workday, which had been strong, down 3%. Baidu, Netflix, down a little bit. So some of the bigger names were down, but there's plenty of strength out there to carry the market higher. But I still think we got to be careful. I think we've got to be careful because the market is nervous. And could the weakness, even if the temporary weakness that we saw in Apple and Tesla, could that be the first couple of cracks in the foundation to maybe have September be one of its, typical rough months? I don't know. We're going to find out. But I do think you've got to be cautious. You got to be more cautious now than I think you've been throughout the last few months if you've been trading on the long side. I'm still, if I'm buy and holder, I'm holding. I'm sticking with this market. I'm not going to try as a buy and holder. I'm not going to try and time my exit and then re-entry. That's a trading strategy. It's not a buy and hold strategy. So don't confuse the two. All right, let's move on. I want to move on to the anatomy of a trade. And here I want to just go over a stock. And I really feel like this stock, I'm going to show you a daily chart here. This is Atomera, ATOM. But let's pull up a daily chart here. Look at the volume that just came in. This was back on Monday. The huge volume on August 31st, biggest volume in a year. Big move up from $11 to over $13, closed at a new high. Great breakout. Well, a lot of times when these stocks break out, and I've noticed this before, when they pull back the next day, sometimes they'll go back intraday and pull back, or maybe get back to that 20-day moving average, and then they'll turn and go back to the upside. So they have what looks like a false breakout. They come back down, fail to hold that breakout. A lot of folks that got in at 13 and change will see that they're down, 15% in a pretty short period of time. They panic, they get out, and then the market turns back around and goes back to the upside. I've seen it time and time and time again. So this was a trade that I liked, and I'll show you what I did with this yesterday, because I got in yesterday. So here was the big volume day where it broke out. Finished up here on a 1270 or whatever. Gaps up a little bit on Tuesday and pulls back. Now, I was looking at it. When I looked back, I saw this low at about $12. I saw another one come down almost to that level and test and then go higher. And so $12 was one level I was looking at. If we go back to that daily chart, you'll see that the 20-day moving average right now is 1139. I think yesterday when I was looking at it, it was right around 1150-ish, something like that. So if we go back to that 5-day chart, I had put in my an order at 12, and I put an order in at 1150, down to 20-day moving average. Well, I got the order at 12, got all the way down to 1160 and change, and then came back up, went back through 12, one more move down, and then started rallying. And I thought, okay, I didn't get my second position, but first position looks pretty good. I was expecting a rally. Now, the most disappointing thing for me on this trade was that semiconductors gapped up today and had a huge day. And if we go back and we look at Atomera on a relative basis, this stock, well, the semiconductors relative to large caps were, versus the S&P 500 were breaking out. They broke out today, but they were already strong. They've been in an uptrend for a while. This stock, if we go back here, let's take a look at Atom. Let me pull this one up on a relative basis. So Atom on a relative basis was recently at a 52-week high versus the semiconductors. So I've got a strong group. I've got one of the strongest stocks within the group. I've got the accumulation distribution setting a new high, and the stock was pulling back intraday. I was like, okay, this is a perfect setup. So ended up getting in. The only lucky part was I didn't get my second entry because with today's gap down, I never saw a news story, by the way, but it gapped down and went below the 20-day moving average. So this morning, I ended up having to take a loss. So I got in at 12. Today it opened 11:35, and basically I was out fairly early today. I don't remember exactly when it was, but it was pretty close to the open. And I know it was 11:30 and change or something like that. But, that was a quick 70-cent loss. So it was probably about close to 6%. And it seemed like everything was set up pretty nice on this trade. And who knows? I mean, the stock may come right back. Like I said, it's one of the leaders in the semi space. I would expect it to come back. But I don't take, I already had my loss set. I was going to, if I had a open or close down below the 20-day moving average, I was getting out. I didn't, an intraday move below the 20 would have been fine. I probably would have waited for the close, but I didn't like seeing this big gap down on heavy volume. And so I just had to, just take a loss. So very frustrating, but, it happens. And from a trading perspective, you've got to expect that it's going to happen from time to time. It's part of trading. All right, earnings. A few companies out after the bell. So first one up I wanted to talk about was CrowdStrike. CrowdStrike had a really good earnings report, and I'm going to pull up the after hours quote on it here, so bear with me a second. All right, so CrowdStrike came out with their earnings, and they were really strong. They easy beat on the top line. Bottom line, it came in at 3 cents. The market was expecting a loss of 1 cent, so a nice beat on the bottom line. They guided quarterly revenues and earnings per share higher next quarter, and they guided next year revenues and earnings per share higher. So they couldn't have come out with a better report. After hours, the stock's down almost 6%, down $8. Last trade, 134. So right about in here. Now, it's not horrible. I mean, we've had a big run. I think we've got some really good support just below 120. So don't be shocked with the volatility and all if this stock goes back to 120. That wouldn't surprise me at all. In fact, intraday going down to 110 or something wouldn't surprise me. But I'd be watching that close at the 20-day. If we go below the 20, come back up above it, might not be a bad time to think about a trade there. But with all of the fear that's building in the market, even good reports like this might start to see these kinds of reactions. And so we just have to be careful, I think, as we move forward here. Let's see, another company that reported. Who else do we want to talk about here? How about Guidewire, GWRE? So Guidewire came out. They beat on their top line. They crushed their bottom line, 83 cents versus 45. They guided fiscal year 21 revenues higher, but they did lower their quarter 3 revenues. So their upcoming quarter, they lowered their revenues. And let's see, Guidewire right now is up 5 after hours. So we're looking at $124 here. Still, if you look back, that was the February high. We had an open of 123.51. So let's see if we can open above that level and then hold it on tomorrow's close. That would be a bullish development if we could. We are at 124 right now, but again, this is after hours, so we got some work to do still. All right, let's see, maybe one more. How about let's look at Cloudera. Cloudera beat on the top line, bottom line, 10 cents. Market was only expecting 7, so a nice beat on the bottom line. They guided everything higher. Next quarter revenues, next quarter EPS, next year's revenues, next year's EPS. So really good report on Cloudera. And after hours, let me pull the stock up, the chart up for you. After hours, the stock is down 35 cents to $12.89. It's down 2.6%. Now, I think we've got a cup. So beautiful move up. I think we've completed this cup to the upside. That's a bearish engulfing candle. So the fact that it's down with a good report doesn't surprise me. Watch that rising 20-day. I think that's going to be a key support level for Cloudera going forward. All right, let's move on. I want to get into the 3 you must see. I'm going to start off with Align Technology. You can see the big move on, and I'm going to pull this up. Actually, it is up on a relative basis. So healthcare stocks got a nice lift today. Medical supplies broke out. Let me repeat that. Medical supplies broke out. We have been trying for close to 2 months to get this breakout. We broke out. Align Technology has been a leader. So when you get a leading stock in a group that's just breaking out, it's worth noting. Align, nice move today, really nice candle. The accumulation distribution, I think, still looks very strong. This is a stock that I would expect to continue to go higher. And if money continues to be moving toward defensive areas, healthcare could see a little bit more than its fair share as a result of that. So I think Align looks nice. Another stock in this same space, Dexcom. This has been a leader for a while. Look at the AD line, very strong. All of a sudden, this stock has been doing nothing for the last 2 months. All of a sudden, the stock up over 6% today. Look at the volume surge. There's that breakout again on medical supplies. And this is a stock that was a leader and, has been sideways consolidating. I don't think it's really lost a lot of relative strength. It went straight up back in March, April, and May, pulled back into June, and then I think, kind of moved back up a little bit. So I think the stock still looks pretty good. Watch for the breakout. 455 would definitely be a breakout in that area. You start seeing 460 print, and you are definitely in breakout territory. So watch Dexcom. And then the final one I wanted to talk to you about for the 3 you must see is Kansas City Southern. Talked a lot about the transports. When the transports get going, that's usually a good sign for the market, the sustainability of a move to the upside. It doesn't mean we can't pull back for a week, couple weeks, consolidate, iron out some of these issues that I talked about with the VIX. The one thing I didn't talk about is the equity only put call ratio, which has been extremely low, very bullish, and that's a contrarian indicator, so we got to be careful with that too. But Kansas City Southern broke out again, and look at the volume pickup. Railroad index continuing to move higher. This is a really nice looking chart. So those were 3 that I think are worth keeping an eye on as we go forward. All right, that is it for me for today. I want to wish everybody good luck on Thursday. Hope the market runs in your favor. I'll be back over at Earnings Beats next Monday for the next Trading Places Live. Have a great day, everybody, tomorrow, and then enjoy your weekend. Happy trading.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.